What's going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some of the data points, break it down on what's really moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So Opendoor is up 0.91%, 760 the low, 807 the high, and roughly about 41 million shares being traded. So today is a low volume day, and you are seeing that across the board, not just Opendoor. So I think institutions are somewhat hesitant to really get in, and I think there's some divide that is occurring because, for instance, the data that did come out, we had ADP employment, which came in at negative 13,000. That wasn't great. Retail sales came in at 0.2 versus a forecast of 0.3, and then consumer confidence came in at 88.7 versus 94.2. None of that was great. And so even based on a lot of the Fed speakers recently, which hinted to a December cut, reason why they were hinting to a cut is because of a weakening labor market. All of this data justifies that. So this is where you're seeing the market somewhat torn. Some institutions are investing based on this information. Some are investing based on the likelihood of a cut. So right now, because of that negative data, this did increase. So now there is a 84.7% likelihood of a 25 basis point cut. Institutions seem to find this very advantageous for Opendoor because on the secondary market, you see a lot of institutions buying up Opendoor. And so big one for today, 2.9 million so far, and anything with an ask on a side note is a buy. So this is exactly why I like to look at a lot of the data behind the scenes, because it kind of does signal what institutions are truly doing. And sometimes algorithmic trading artificially suppresses the stock, but if you kind of follow what big money is doing, I feel like things will work out, in my opinion, but I could be wrong. Let me know your general thoughts on that. The only other data point that did come out was PPI, and that's more linked to inflation, and that came in at 0.3 versus a forecast of 0.5. So that one data point was fairly positive, but again, Fed speakers weren't really concerned with inflation, rather it's just more labor. At the time of doing this video, there hasn't been any SEC filings, no press releases, nothing really concrete, so it's just very speculative in nature right now. So people are just assuming what is going to be coming next, and I think they have their heart set on a rate cut, and so that clearly is going to be a good catalyst for Opendoor. There really hasn't been anything on social media either, so Kaz and a lot of the other members haven't really said anything. Kaz just posted this roughly around, or responded about 4 hours ago, just saying that Opendoor, in his opinion, is the most AI native company in the space. And we already generally knew that, right? And that's exactly why Wall Street hates Opendoor, because it's a disruptive, innovative company, and it's using AI to do that. Wall Street hates that. So in general, nothing really concrete for that. At the time of doing this video, shorts are returning 771,000 shares. 23.28% of the free floats being shorted, works to be 140.1 million shares overall being shorted. So I've seen a lot of people talking about how Opendoor is a squeeze play. As I've mentioned, I personally don't really see that being on the table just yet. Potentially, if they're to execute a lot of their plans that they mentioned in their last earnings, maybe. But for right now, I think just the certain level of fear that's linked to consumers, that's going to really hold back a lot of stocks from squeezing. But nonetheless, if you guys believe that, I'm not here to kind of pop your bubble. As I've mentioned, I'm not here to get you guys to buy nor to sell. All I'm doing is interpreting the data. Aside from that, looking at the options, we're seeing about 2.6 million in calls, 472,000 in puts, and then 52% of all the options being done are bullish in nature. From a bull standpoint, you see a consensus for it to be kind of between the 8 to 850 by the end of this week. And oddly enough, you see a lot of optimism for it to be above 10 for next week. So I'm not really sure why. That could be just hedging happening. But what is your general thoughts? Is there some catalyst that's coming out next week that I am not aware of, or something specific to Opendoor? I don't think there's any interviews or anything, but nonetheless, bears are anticipating for it to be sub $7, and then interestingly enough, you see a consensus for it to be sub 4. So most likely that's just one large institution just doing most likely, I would assume, a short strangle. I would assume, again, maybe just a low risk one. But nonetheless, aside from that, I already went over this. So these are some of the transactions on the secondary market. These are some of the transactions occurring on the dark pool. Dark pool is often enough used by shorts and hedge funds. And from how active shorts are, it is fair to assume that most of these transactions are linked to them. Aside from all that though, with it right now at 775, it is trading between this pivot and this S1. So 657 is a strong support, and then 790 is going to be the next strong target / resistance. Did kind of break past that. So when it was starting to really move higher, that 790 didn't really, I wouldn't really consider that a strong resistance, which is a good thing. So once the market does kind of digest all the data and starts to possibly move higher, this is where you could see that 790 not really acting as really a strong resistance. And then Opendoor just kind of moving higher. So just kind of watch for that. If it is able to get above and stay above 790, then 922 is going to be the next strong kind of point to watch for. Aside from all of that, on the chart itself, it's showing some improvement. So it was a little bit more of a scary push lower when it did break below that 50 and also 10-day moving averages, but luckily enough it is starting to really move higher. So it's wedge bound between that 50 and 10-day moving average at the time of doing this video. 2 consecutive days of it trying to break above that 50. So normally what does happen is anytime a stock does fail to get above a key resistance, usually you see some level of consolidation. So that might potentially occur later today or as well tomorrow, and then you might see a retest of that 50-day moving average possibly come Thursday or potentially even Friday. Thursday is a shorter day, so the market does close at 1 because of American Thanksgiving, and historically we see very low volume on Thursday as well as Friday, so that might be a good opportunity for Opendoor to really move higher. But aside from that, that 50-day moving average is sitting at 787. You see a lot more willing buyers, so that's always a fairly good thing. You're not really seeing that same level of willing buyers though on a lot of other speculative names. So Opendoor is getting a abnormal amount of attention, so I don't think anyone's going to really complain with that. Aside from that, there really hasn't been all that much in articles kind of talking about Opendoor. No analyst ratings. The last one did come out on the 12th. It was a downgrade from Mizuho, $8 down to $1.40, and aside from that one, it was on November the 11th. So analysts are kind of just waiting to see if Opendoor is able to kind of execute, like I said, on a lot of their key plans for the foreseeable future. So let me know your thoughts on Opendoor. Are you buying? Are you selling? What are you generally doing with Opendoor, and where do you see things going in the future? Do you see like a breakout retest of that $10 range, or do you see more further consolidation? One final thing, because of Black Friday, I lowered all the prices on my tiers. So if you're looking for some solid buy signals on stocks, options, crypto, pop over there, put out daily day trades, numerous swing trades, worthwhile to kind of check that out. Link in the description below and also the comments. With all that said, appreciate all of you watching.